Deciding on what retirement account is right for you to be building the life of your dreams later on can be very difficult today. The reason is not only is that we as a financial industry have made it very confusing to know the difference between accounts, but at the same time, there's a lot of circumstances that come into play here. And unfortunately, I won't be able to solve for that piece of this. But in this video, I simply want to break down some of the main differences between retirement accounts, what you should be considering, and how I traditionally try to categorize them for clients and helping them clarify their thinking and what they want to set up for retirement. Because at the end of the day, there's really not going to be a black and white answer here. There is no right or best account when it comes to this. And I know in today's world that's very cheap. A lot of times YouTube is full of a lot of clickbait where it says, do this or do that. The truth is, it's really going to depend on your personal situation. And easy segue there, and to give you the disclosure that this is not financial advice. These are not recommendations. I'm merely just trying to arm you with knowledge when it comes to your retirement plan. So let's jump right into things. What should you be thinking about whenever you're thinking about contributing dollars to your retirement? Whether you're 25, 45, 65, this is a very important conversation to have. Of course, this is not something I necessarily have to tell you. This is probably something you're thinking about a lot. And what I want to start with is breaking down pre-tax versus post-tax accounts. So your 401k at work, a traditional IRA. If you're a teacher, your 403b. If you work in the government, a 457. If you're a business owner, you have your solo 401k, a SEP IRA, or a simple IRA. Right? There's a lot of things, a lot of accounts that you can choose from here, but the main thing is going to come down to pre-tax versus post-tax. Now, let me simply explain how an after-tax account works, pre-tax account. I hope I'm not insulting your intelligence, but just as a refresher, here's what a pre-tax account is, okay? I make $100,000 in a year. I contribute $7,000 to my traditional IRA. In the eyes of the IRS, I'm allowed to subtract $7,000 from my taxable income that year. Therefore, I've taken the deduction in the present year and I've decided to kind of defer that tax to the future in retirement, right? Now, if I compare that to an after-tax account, which has the Roth feature on it, I've essentially just done the total opposite, right? So I've taken the tax today, I've paid the government their share, but I've said, hey, this account is now after tax. In retirement, this is going to be tax-free. And that is really the kind of the high-level difference between these two. And I know that that doesn't help answer the question. So let me kind of break down an ideal person for that pre-tax and that post-tax account. And you might have a feature on both accounts, and that might make it a difficult decision. And again, I mentioned at the start that I won't be able to tell you which account to invest in, but I want to give you, of course, a few things to think about here. So if you are someone that wants a tax deduction today, the pre-tax account is probably going to make more sense. The reason being, you can't take a deduction with an after-tax account. So your Roth IRA, your Roth 403b, your Roth 401k, no deductions come with those. So with your 401k or your IRA, you're going to have that option to you. With the note, if you make above a certain income, you do have a phase out in your IRA, right? So with your 401k, you can always take a deduction. With your IRA, I would check with your tax professional and see if you fit that criteria. The other thing I will mention is if you believe you're going to be in a lower tax bracket in retirement, it might make more sense to consider the pre-tax account. It's as simple as if I'm in a 32, 37% tax bracket today, and I expect to be in a 22% tax bracket in retirement, well then why would I pay the tax today, right? I'll just wait, I'll defer that tax until later. The problem is, of course, is that a lot of folks get into retirement and they're unpleasantly surprised at their tax rate in retirement. Things like Social Security, things like annuities, things like pensions can kick off higher incomes in retirement than one is expecting. So just be very mindful of that when you're thinking about your future. Now, why would someone consider that after-tax retirement account? Well, traditionally, the industry has said that if you are younger, this is always the right option for you. That is not true. Anytime you get a one-size-fits-all answer, it is definitely probably something that you should discard. But a couple of things that come with that after-tax account, of course, is tax-free income in retirement. So if you're someone who would like that, it obviously sounds ideal, but you have to remember that you have to pay that tax today. If you have a long timeline in front of you, it might make sense to look into this after-tax account. You're going to be able to remove the government from joint ownership, as we call it, with this account, and you're going to be able to take that those withdrawals in retirement. tax-free. The other piece here, and this is a benefit that a lot of people actually don't think about, in retirement, Roth IRAs do not come with RMDs, required minimum distributions. So if you're not familiar with what required minimum distributions are, this is what comes with those pre-tax accounts, right? Remember when you deferred that tax out into the future? Well, starting at age 73 or after 2033 coming up here in a few years, age 75, this is going to represent the age that the government is going to turn your account on for you. And no, I mean that literally. They are literally going to make you take a certain portion of your account out per year based on your life expectancy, and they're going to tax you on that. This is essentially the government saying, hey, we let you take that tax deduction earlier in life. We've waited long enough. We're going to tax you now. Okay, so that is an important consideration to make, is that the Roth IRA does not have these in retirement. You have full control over when you take this out. You have full control over how much you take out, and you don't have to take it every year if you don't want to in retirement. So that's one of the main kind of comparisons to make here. Maybe the last thing I'd mention is if you expect to be in a higher tax bracket in retirement. A lot of people, as I mentioned, have a lot of things going on that provide them income in retirement. And if that is something that you're expecting, sometimes the Roth IRA might be a better option as well, or the after-tax account. So that's really it from a breakdown of how we decide between accounts. It's really, I don't want to make it as simple as pay now or pay later, but you do have to know that at some point you're going to have to pay with that retirement account. The main thing to consider is, does it fit my tax situation and what I expect, right? And this is a conversation that it would be ideal to sit down with your advisor and think about, but that is very important because taxes can ruin, is that too strong of a word? Taxes can greatly hinder your retirement and your enjoyment of it, simply because the government can at times take a very significant portion of your retirement. And I know probably a lot of you are not the biggest fans of the government doing so, unless your name is Mark Cuban. So that is something to consider. Before you go, I want to share a quick Japanese proverb with you. If you're someone that feels like you've been contributing to the wrong account, or if you feel like you're behind, and that is simply, if you're on the wrong train, get off at the next stop. The reason is, the longer you stay on that train, the more expensive the return trip is going to be, right? So if you're someone who has been maybe making the wrong decisions when it comes to your finances, not even just contributing to the wrong account, if you're someone who's just been making recurring issues with your finances, just know that it's much easier and much more beneficial for you today to put a pause on it and just get off that maybe negative mindset train, if we could call it, and then just get on the right train, going in the right direction, right? So that's something I always like to tell folks. If that fits, I don't know, just thought I'd try it out. But anyways, I appreciate your viewership today. If you want to email me, I'm gonna leave it right here. But remember, all this is not financial recommendation, it's purely for education. I hope I helped add some clarity to your retirement picture in some form or fashion. But as I mentioned, if you have any more questions, feel free to let me know. Other than that, I wish you a great day.